Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 30th of August 2020. And yesterday we published our gold and silver weekly update for the week ending the 28th of August. Now in yesterday's report we pointed out that equity markets were on a tear, reaching multiple new highs, primarily the result of financial stimulus engendered and encouraged by governments and central banks alike. One of the consequences of the current environment is a race to the bottom for interest rates, and this, coupled with banks being encouraged to ease lending policy, even to those who perhaps cannot afford to repay in the future, is likely to lead to a similar crisis experienced in 2008-2009, if not much worse. Now, whilst most will have the view that banks are just parasites feeding off the system, and we would be better off without them, they are nevertheless part of the current system. And if that system is to be deconstructed, bankrupting the banks is probably the most painful way of going about it. Painful for all concerned. Now, the purpose of this podcast is not to protect the banks, but to point out that in a low interest rate environment or regime, as we are currently experiencing, not only can banks not make a profit, but they will further exacerbate the problem by making bad loans encouraged by desperate governments to maintain some form of order and stability. You see, what the Bloomberg article is telling us is that even in an economy like China, which is perhaps one of the better off ones coming out of this pandemic crisis, this economy has serious fault lines ahead that are not only serious, but potentially ruinous. Let's just take a look at what Bloomberg has to say. Bloomberg article dated August 30th, 2020 at 10:29 a.m. GMT+1. Headline: China's megabanks post worst profit slump on bad debt wave. China's biggest banks suffered their worst profit decline in more than a decade as a cascade of loans to businesses across China are going bad. Reporting their first half earnings on Sunday, Industrial and Commercial Bank of China Limited, the world's largest lender by assets, China Construction Bank Corp., the second largest, Agricultural Bank of China Limited, and Bank of China Limited all posted drops in profit of at least 10%. Loan loss provisions jumped between 27% and 97% at the four banks. China's $45 trillion banking system has been put on the front line of helping alleviate the worst economic slump in 40 years, triggered by a large-scale shutdown due to the virus outbreak. Authorities have required lenders to forgo a 1.5 trillion yuan, the equivalent of $218 billion in profit, by providing cheap funding, deferring payments, and increasing lending to small businesses struggling with the pandemic. In total, the nation's more than 1,000 commercial banks posted a 24% decline in second quarter profits, with non-performing loans hitting a record 2.7 trillion yuan. Citigroup Inc. last month slashed 2020 to 2022 earnings forecasts for major Chinese banks by more than 10 percentage points and expects them to suffer a 13% drop in profit this year. Under mounting political pressure, China banks not only have had to further cut loan yields to subsidize the real economy, but also need to accelerate counter-cyclical provisioning and adopt more conservative NPL assumptions in setting provisions. Citigroup analysts led by Judy Zhang wrote, "The potential negative earnings growth will overhang the China bank's near-term share performance." Pressured by the government to lend to struggling businesses, loans and advances at the four big banks rose between 7 and 10% in the first half, even though bad debt surged. Investors have never been so downbeat on Chinese lenders' outlook. Shares of the biggest banks are trading at about 0.45 times their forecast book value, a record low inflation. In other words, less than 50% of their book value. After underperforming the benchmark indices in Hong Kong and on mainland for most of the past 5 years. Moody's Investor Service expects bad loan pressure to stay high amid weak consumer sentiment, putting banks' profitability under stress for the rest of 2020. Economists forecast gross domestic product will grow 2% this year, slowing from 6.1% in 2019. Chinese banks joined the chorus of global lenders warning about a difficult economic outlook. HSBC Holdings plc said the fallout from the pandemic may trigger loan losses of as much as $13 billion this year, while JP Morgan Chase & Co. spoke of a protracted downturn and said government stimulus was making it harder to gauge the economic damage. In the worst case, China banks could be guided to reduce profit by around 20 to 25% in 2020, according to Jefferies analyst Su-Jin Shen. Further reduction would hurt banks' capital even without any dividend payout and would be harmful to financial stability, she said. The banking industry is facing a more complex and uncertain external environment, CCB said in its report, citing the pandemic, economic downward pressure in China, geopolitical tensions, and the potential for a disruption in globalization. China is recovering slowly as President Xi Jinping is accelerating his push to make the economy more independent amid a broadening confrontation with the United States over everything from trade to finance and technology. Tensions between the world's two superpowers over Hong Kong has sparked tit-for-tat sanctions on politicians and officials on both sides over the past few weeks. China's biggest lenders are looking over their accounts in order not to endanger their access to crucial dollar funding. The big four banks had $1.2 trillion in such funding at the end of June and could face fines for doing business with any of the 11 Hong Kong and mainland officials targeted by United States sanctions. With numerous banks around the world not only stating that their profitability will be cut, but a number will be entering into major losses, with perhaps just their trading arm helping to ameliorate some of those losses, which will, frankly, only survive while equity markets thrive. When those turn down, even their trading operations will be adversely affected. Then, we have to ask, are we at the start of what could become a financial institutional crisis? If banks close, default, or you simply cannot get your money, then economic and societal Armageddon will be upon us. Okay, we admit this may be a little dramatic, but rest assured and be under no doubt that the domino effect within our financial system is real and something all of us should prepare for, just in case. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Finally, we shall be publishing a podcast on the Richard and Greg channel tomorrow. It's been over a week since one was published, and we hope therefore to catch up with a few in the coming week ahead. So if you haven't already done so, please subscribe to that one too. Thank you once again for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.